In terms of the crypto or altcoin, I wouldn't actually deem that as an asset class, personally, because it doesn't produce an income. So
neither does gold.
Neither does gold, and that's a great, very topical point because it's done quite well recently. Although it's had a little wobble.
Yeah.
And again, what you're paying for with gold is hoping that someone will pay more for it in the future.
Yeah.
Same with crypto.
Yeah.
That's all it is. It's not paying you rent. It's not paying you an income.
Yeah.
It's not like you're loaning money and getting interest.
No.
It's purely based on the future value you think it's going to go ahead.
Yeah.
And for me, that's not a good enough reason to invest in something. Let's say we've got 3 assets. Simplify things. We've got your dental practice.
Yeah.
High effort, high return.
Yeah.
Okay.
Maybe high return.
Maybe high return. If it's run properly, maybe high return.
Well, we measured a lot, and probably just a short interlude.
Yeah.
The average level of profitability in a dental practice after everyone gets paid. I think everyone's got to get paid, including the owner.
Yeah.
We see the average level of profitability is, but probably about 4 to 7%.
Okay. Interesting.
And I think a lot of people think they're a golden goose, but when you kind of bring it down and make sure everyone I keep kind of repeating that, but after everyone gets paid, I think everyone, like the kind of core mathematical analysis tells a different story. On average, there are good ones out there and bad ones. So you can have quite a wide variety there because it's a business. I think that's your point. It's kind of a living, breathing thing. And
would that include the principals as if they were paying themselves an associate?
They should do.
They should be, I agree. But do they generally?
Well, sometimes you need to run the maths to find out. But if you do run the maths properly, that's where the average level of profit kind of sits.
Yeah.
Should be double digits. In my opinion, it should be double digits because you want that kind of return. That's what we're talking about. It kind of reminds me, actually, we're talking about property, and I've developed my kind of opinions about property because I've had property, still got some property, but I'm definitely approaching a channel now where in an ideal kind of scenario, my kind of personal wealth portfolio is populated with assets with the least amount of people involved.
Yeah.
Because people are becoming more and more variable.
Yeah.
And you might think property is a bricks and mortar kind of thing, but the trouble is you've got tenants.
Yeah.
And, it's, coupled with the tax as well, I'm definitely kind of swaying away from that. And, it'll bring a little tear to your eye, but more towards stocks and shares because there are way less people involved.
Yeah. And it's low effort. So the dental practice, that's usually it's our clients' main assets. Would you agree? It's where a lot of their wealth is. It's where you can generate wealth quite quickly if you're a specialist and if you're good at what you do.
Yeah.
And I always ask the question, well, how many patients have you got? Normally it's between 2,000 and 4,000 if there's enough dentists there.
Yeah.
So that kind of diversifies a little bit. The treatments obviously is where
between 2,000 or 4,000 people to deal with.
That's it.
Back to my kind of thesis.
That's it. And so you've got that diversification of client or a treatment, and it might be different treatments or whatever. So that's one asset. Then we look at property.
Yeah.
So we've got medium effort, let's say.
Yeah.
Medium return.
Yeah. As an IFA, are you allowed to talk about property?
I'm allowed to talk about it.
Yeah.
I don't recommend it in terms of I'm not allowed to recommend
yes or no.
Yeah, I'm not allowed to say yes or no on a property investment, and it's not my specialty.
Yeah.
I kind of just look at the broader picture and I say, okay, we've got one location, which is the UK, usually.
Yeah.
I've had people talking to me about buying property in Dubai. Again, the risks. I just think, why are you going to take the risk? You've usually got one tenant or a couple of tenants, so you're not very well diversified already if we compare it just to your dental practice.
Mm-hmm.
And then we've got the investments, which is public markets, which are low effort and medium return. And you're looking at well-diversified portfolio of, let's say, equities, which means company stock shares. It's the same thing. 10,000 different companies. And more than that, you're looking at, let's say we've got Pfizer, McDonald's, Google. Think about how many customers they've got in terms of diversification. So it's not just the companies, it's just the customers they've got as well.
Yeah.
And the comparison between all three.
Yeah.
And it goes back to, well, how do you want to spend your time? You spend as much time as you want on the dental practice and make sure you've got time for the family and the lifestyle and the health, because it gets dentistry gets heavier as you get older. It's not an easy gig. And that's where understanding the investment side of things can really come to the forefront, and actually understanding the concept of, well, what are we owning here? We're owning a small piece of a business which is similar to yours, but just traded publicly. So there's more rules which they need to follow, which pay dividends, which invest, which grow.
There's this kind of yin and yang, isn't there? You've mentioned the word kind of diversify quite a bit. It's obviously an important, you haven't vocalized it necessarily, but it's obviously an important part of your perspective on it. I know full well there's going to be forums and client sets out there are thinking, but I still won't make as much money as that singular property, which you've described already, but or crypto, but I can go 10x if I invest in this random altcoin or something like that. Like they're not perfect kind of polar opposites, but there's definitely this kind of yin and yang to it of the multiplication or the return you're getting compared to the diversification, and perhaps it's like the less likely to lose money, because you're definitely definitely likely to lose money if you go into altcoins. I got a different kind of thesis on Bitcoin, but all right, there's still this kind of balance, I suppose, isn't there, between, well, what can I turn my 50 grand into? If I put my 50 grand over there, I might be able to 10x it. Versus you're not really I don't think you're anywhere near saying that will happen.
Oh no, nowhere near that. And in terms of what we do, we're not going to turn 50 into 500 within a couple of years. We preserve and grow wealth, but not to a degree where it's going to be anything like those returns. And that's something that most wealth managers are clear on. And if they're not, you should be quite cautious. My view would be, would that 50,000 be better in that asset class? We'll talk about asset classes in a minute, but in that altcoin, or can you spend 50 grand in your practice towards a new surgery where you could generate more income? And would that be a better return? And would that add to not just your income, but your sale value? And it's just that type of thinking, is say, well, either yes it is, or no I can't. And I wouldn't actually deem that as an asset class, personally, because it doesn't produce an income. So
neither does gold.
And that's a great, very topical point, because it's done quite well recently, although it's had a little wobble. And again, the price, what you're paying for with gold, is hoping that someone will pay more for it in the future. Same with crypto. That's all it is. It's not paying you rent. It's not paying you an income. It's not like you're loaning money and getting interest.
No.
It's purely based on the future value you think it's going to go ahead. And for me, that's not a good enough reason to invest in something. And that's why those three main asset classes, what we call fixed income, which can be bonds, property, which obviously pays rental, and then businesses, which mostly pay dividends, but if they don't, they'll reinvest it in the company and you get capital growth. So that's where I invest my money and our clients' money, and my own money kind of goes in either into our business to grow to a size we want, or to invest in things we think will improve our service, or it will go within a pension or an ISA or within our limited company in those funds.
I'm kind of quite mindful that the different demographics or different generations even of people out there, whether you're talking about the boomers, the millennials, the Gen X, et cetera, like there could well be someone sat there saying, I've managed to kind of work hard, save my 50k. Great idea. I believe everything you're saying. I just can't afford to move that slowly. Like whatever investment returns that might be secured in what you're talking about there, but it's like no, in order to kind of get to where I need to in life, I do need to 10x. So there's this kind of, okay, maybe it's not kind of rolling the dice or roulette, but if I were to invest 50k in the stock market, fair enough, I might not lose it over the medium to long term, but I'll just end up in a position that just won't be good enough for where I need to. So I have to go into property or crypto or specify to get essentially much larger returns. How is that fair? How do you deal with that tension?
It just would be not a good fit for us. I can only help people that that can see what we value in what we do.
Yeah.
And it might just be, it's not a good fit. If you want to do that, that's absolutely fine. My view would be, if you've not got enough and you need to kind of Hail Mary to that degree, then that's even more of a reason not to do it.
Oh, yeah.
Because then,
I think there's a lot of people in that boat, though. I think that's what I'm perhaps raising to the surface. There's a lot of people in this country that are disenfranchised.
Yeah.
A lot of people absolutely battered around by the tax system. So that, okay, you're working hard and you might have 50k surplus at the end of the year, but HMRC comes along and suddenly you've only got 25 anyway. So there's like, where do we go with it? Sod it, I'll move to kind of Dubai, because at least I get to keep all of my 50k.
Yeah.
It's becoming more common that we're seeing this kind of level of, there's this deflation, isn't there? It's like, but is it? How do we deal with that? I think that's a job for you and I will say as much as you, but
definitely, I think now more than ever, and we've said this so many times, you need to take advantage of every opportunity you've got. And I was speaking with a mutual client of ours, and Simon's managed to save him 20k a year in tax.
Yeah.
And he's over the moon, obviously, with it. But it's just good, knowing the right people, having a strong financial team in place, can just do wonders and have such an astronomical effect on your financial position. And you have to be taking these opportunities, because 20 grand a year, the chap's early 40s, he's probably been working another 20 years.
Yeah.
400k without, that's a lot of money.
Well, compound and
and it's not like it's being spent wisely. You wouldn't mind if everything was tip top and
tax. You're talking about
tax, of course. Yeah, you wouldn't mind if kind of everything was going the right way.
Yeah,
but it doesn't feel like that.